Hello, everyone. This is Mohammed Neeb, and welcome to my Forex Trading Mentorship 2023. So, this mentorship will be based on the Wyckoff method, okay, and it will strictly follow the Wyckoff curriculum. All right. So, this mentorship will last for 3 months, starting from April 1st, and it will end on June 1st. Okay. So, let's get started, and let's directly head to the contents of this curriculum, like what we will be covering throughout our mentorship sessions, our subsequent mentorship sessions. So yeah, so first of all, we're going to start with the basics of the Forex trading. Okay. So the first thing we're going to discuss during our first few sessions would be the definitions of Forex trading and the CFD trading. The CFD trading, CFD is also known as contract for differences. And then we're gonna discuss that who are the participants of the Forex trading. I mean, who participates in the Forex market? Who are those kind of institutions, or who are those kind of entities that participate in the Forex market? And then we're going to discuss the concepts of the base currency and the core currencies in the Forex and CFDs market. And then we're going to discuss the major, minor, exotics, and the metal currency pairs in the Forex market. Okay, once we're done with it, we're going to head over to the basic terminologies related to the Forex market. Those are the pips, the points, the lots, timeframes, stop loss, take profit, break even, stop loss, trailing stop loss, and market order, pending order, partial fills, complete fills, partial profit booking, liquidity, gaps, volume, volatility, slippage, ask bid spreads, depth of the market, and leverage, margin, swaps, balance equity, commissions, pip value, etc. Okay, etc. Right. And then after grasping the foundational concepts of the Forex market and Forex in general, we're going to head for the different types of the orders we have in the market. For example, we have the market orders, we have the pending orders, and the advance orders. Okay. And then we're going to cover the basic understanding of the supply and demand, okay, and the relative currency strength and weakness, and definitely the correlations in the Forex and CFDs market, okay. Furthermore, we're going to also analyze and evaluate the risk on and risk off environments which we face during the financial markets, right? Risk off and risk on and risk off events and environments, okay, we typically face in the Forex market, right? Okay, and then we will move on to the macroeconomic fundamental indicators. Okay, macroeconomic fundamental indicators are the driving point. They are the catalyst that drives the market in that drive the prices in the Forex and the contract and CFDs market. Okay, we have to understand we're going to focus on the grounding concepts of the macroeconomic news events that impact the Forex market. And then essentially, we will also learn how to use a macroeconomic calendar to monitor the macroeconomic news, right? Okay, so once we have the basic understanding of the Forex market and how the Forex market moves and who are the participants in the Forex market and what typically goes in and out of the Forex market on a daily basis, we're gonna head over to the tools, okay, the types of analysis that we use in the Forex trading. Okay, this will cover, okay, the styles of the trading adopted by the Forex traders. Okay, and then we're going to move on and understand how to use the most popular trading platforms, okay, used in the Forex market. These are the MetaTrader 4, MetaTrader 5, and the TradingView. The basic concepts, after covering this all, right, we're going to head for the basic concepts of the market structure. Okay, the basic concept of the market structure, and we will define them in terms of the supply and demand, okay, lines and zones. And then we're going to and then we also going to discuss the key levels like the horizontal support and resistance lines and zones, the dynamic support and resistance in terms of moving averages, the swings, highs, and lows distribution within the market structure, and the candlestick patterns, of course, the chart patterns, the price action, the Dow theory. We will not dig deeper into them, but we will touch an overview, right? We will get an overview of all of these concepts, because these concepts will build the basic understanding and foundation of the Wyckoff method, which we will which we're going to learn as we follow through this curriculum. So yeah, and then there are a few more terminologies, like we're going to understand the divergences and extremes of momentum indicators and the volume-based indicators. Okay, right. So in the market, right, in the forex market or in any typical market like the financial markets, okay, we use two types of indicators. One are the price-based momentum indicators, which we call as the momentum indicators. These indicators are typically derived from the prices, from the price feed. And then there are volume-based indicators, and these kind of indicators are typically derived from the volume feed. Okay, all right. So after understanding and after grasping the firm concepts of the basics of forex trading, we're gonna move on to the Wyckoff trading method. Okay, during the initial phases of our mentorship, okay, we're gonna understand the Wyckoff method. What is it? Like the introduction, the basic introduction of the Wyckoff method in terms of its history, development, evolution, and modern adaptation. Because the Wyckoff method was released, was actually developed in 1931. So with time, there have been some adaptations and, like some developments within this modern times, right? So we're going to discuss them as well. And then we're going to interpret the HLC bars. HLC bars are the higher low close bars. We will interpret the inside bars, the narrow bars, the wide range bars, and the outside bars. Okay, we will also understand the spread of the bar and the significance of its close. Okay, and then we will move on to understanding the swing highs and lows. Okay, as essentially as as we discussed earlier, that we have the swing highs and low distribution. This will be the continuation. This swings highs and lows will be the continuation of the previous session, which we're gonna discuss later on, right? And then we will also determine the market structure in terms of uptrend, downtrend, and the range. Okay, via the distribution of swing highs and swing lows. Okay, I will give you the basic logic of how to identify an uptrend, a downtrend, and a trading range via distributions of swing highs and swing lows. Okay, once we are done with it, we're going to head for the impulsive and the corrective waves that develop during the uptrend and downtrend. Okay, and we will also identify the volatile and non-volatile trends for the uptrend and downtrend. Okay, all right. And then we're going to move on to the identification of the short-term, medium-term, and long-term trends for both uptrend and downtrend. And we will further develop this idea into the 3-stage and 5-stage Wyckoff cycles. Okay. Then we will learn how to construct the trend lines, the horizontal lines, the trend channels, and essentially how to use the reverse use of trend lines. Okay, once we are done with this all, right, we're gonna move on to the identification of support and resistance or supply or demand lines. Okay, we will also identify the basic market structure related to Wyckoff, like the shortening of the thrust, the cluster of closes, the ease of movements, exhaustion, climax move, oversold, overbought, and the change of behavior. And understanding the variations of shortening of the thrust is also the key part. Okay. Then we're gonna learn how to use the volume indicator, the volume histogram, essentially the volume histogram. There are several volume indicators, but what we gonna use in this method, in this Wyckoff method, is the volume histogram. And what we're going to learn in it, we will learn how to identify the ultra high volume, the high volume, the average volume, the low volume. And then we will also learn how to read HLC bar in relation to the volume histogram. I mean, we have the HLC bars as a price feed, and then we have the volume histogram as a volume feed. And we will learn how to use both price and volume in conjunction with each other. Okay. And then by reading this, we're going to identify the anomalies and harmony between price and price in terms of HLC bars and volume bars as represented on the volume histogram. Okay. Furthermore, we're going to read the market bar by bar, which is a micro view. And then we will also learn how to read the market wave by wave, which is known as a macro view. Okay. Then we're going to understand the laws of supply and demand, effort versus result, and cause versus effect. Okay. These are the three basic laws of the Wyckoff. We're going to understand the three basic laws of Wyckoff. Okay. These are supply versus demand, law of supply versus demand, law of effort versus result, and the law of cause versus effect. Okay. We will also understand the volume and HLC bar spreads structure during the uptrend, downtrend, accumulation, reaccumulation, distribution, and redistribution phases. Understanding the variations of accumulation and reaccumulation, distribution and redistribution phases. Okay. Then we're going to identify the signs of strength like the selling climax, effort versus no result, down bar, back holding, spring, hidden spring or test of spring, no supply, ease of movement, fake momentum, key reversal, 2 bars bottom reversal, pushing through supply, capping through supply, shortening of downward thrust, and the oversold. Then we're going to identify the signs of the weakness, such as the buying climax, effort versus no result, up bar, and of rising market, heading up thrust, test of upthrust after distribution, test of upthrust after distribution, no demand, ease of movement bar to the upside, fake momentum bar to the upside, top reversal, 2 bar reversals, 2 bar stop reversals, pushing through demand, gapping through demand, shortening of upward thrust, and the overbought. Okay. Now, these are the basic structures of these are the signs of the weakness and strength, which we're going to identify and implement on the market, on the Forex market, essentially. Then, once we have developed a sense of and a deeper understanding of signs of strength and signs of weakness, we're going to move on to understanding the characteristics of the buying climax, the selling climax, jump across the creek, falling through ice, spring and upthrust. We will also understand the 3 distinct types of springs and upthrust, understanding the difference between failed testing and successful testing, identify the situations where new channel construction, SOT, and immediate retesting are required. Okay, so we will dig deeper into the variations of Wyckoff semantics. Okay. Then we're going to identify the background strength and confirming strength. We will identify the background weakness and the confirming weakness. Okay. We will also mark the Wyckoff semantics for markup phases. These include these annotations include SOS rally, low volume pullback, effort versus no result pullback, and shakeout pullback. Okay. Then we will also mark the Wyckoff semantics for the markdown phases as well. And these annotations include SO drop, a low volume pullback, effort versus no result pullback, and flake off pullback. Okay. We will also mark the Wyckoff semantics for the Wyckoff accumulation phase, like preliminary support, oversold, selling climax, automatic rally, secondary test of selling climax, spring, test of spring, MSOS, major sign of strength, jump across the creek, back up to the edge of creek, and LPS. Moreover, and similarly, we'll also mark the Wyckoff semantics for the accumulation phases like buying climax, failure, selling climax, automatic rally, secondary test of selling climax, spring, test of spring, minor sign of strength, major sign of strength, jump across the creek, back up to the edge of creek, and then LPS. Okay, we will mark the Wyckoff matrix for the distribution phase as well, like which includes the preliminary supply, overbought, buying climax, automatic reaction, secondary test of buying climax, upthrust after distribution, test of upthrust after distribution, minor sign of strength, minor sign, major sign of minor sign of weakness, major sign of weakness, falling through eyes, rally back to eyes, and the LPSY. Okay, and in the last, which is we will also mark the Wyckoff symmetrics for the redistribution phases, like selling climax failure, buying climax, automatic reaction, secondary test of buying climax, upthrust after distribution, test of upthrust, test of upthrust after distribution, minor sign of weakness, major sign of weakness, falling through eyes, rally back to eyes, and LPSY. Once we have understood and once we have retained the deeper understanding of the Wyckoff semantics, we're going to move on to understand how minor sign of strength should confirm major sign of strength to generate the trading setups. And we will also understand how minor sign of weakness should confirm the major sign of weakness to generate the trading setup. Okay. Understanding the chart patterns in relation to the volume is the next step. And we're going to understand the supply and demand zones in relation to the volume. We will use a Fibonacci 50% to 61.8 retracement zone and the volume profile VPOC to identify the LPSY and LPS locations, idealized locations. Okay, we will also understand the characteristics of the bullish breakouts in terms of the pre-breakout buildup, printing higher lows into the resistance before breakout, which is also known as the volatility contraction pattern, and the volume patterns. Okay, we will understand the concepts of the bearish breakouts in terms of pre-breakout buildup, and we will be printing lower highs into the support before breakout. We will be understanding the situation when the lower highs are printed into the support before the breakout, which is also known as the volatility contraction pattern and the volume patterns finally. Okay. We will understand the characteristics of bullish and bearish breakouts failures. We call this as the shell diverse tragedy in terms of the Wyckoff terminology. Okay, once we have developed the basic foundations and understanding of the Wyckoff method, we gonna learn how to develop, how to implement those ideas, those foundational foundational knowledge of Wyckoff into trading setups, and how to actually implement those ideas, those concepts into the financial markets. And of course, we're going to develop our own unique strategies based on the Wyckoff knowledge and the Wyckoff method. And we're going to trade with them day in and day out. Okay, so there will be essentially 4 different strategies which we're going to develop. Okay. So this would be Asian range London Open breakout strategy for GU, British Pound, US dollar, Euro, US dollar, and British Pound JPY day trading strategy. Okay. And then the Asian range European breakout strategy for the gold. Okay. Similarly, we will also develop London range New York Open breakout strategy for British Pound USD, Euro USD, British Pound JPY, and gold. Okay. So these 2 are the day trading strategies. And then we also going to learn how to scalp on 1 minute and 2 minutes time frame using the Wyckoff method, and tape reading concepts on a highly volatile market such as gold. Okay. Then next, we're going to discover and we're going to develop a swing trading strategy using the Wyckoff method. We will use a concept of daily highs and daily lows, weekly highs and weekly lows, yesterday highs and yesterday lows, hourly differentials, and higher to lower top-down multi-time frame approach. Okay. Then we're gonna move on to the risk management part of the mentorship. Okay, risk management is very important, and it should be taken very seriously. And we're gonna learn how to understand. We're gonna understand the risk to reward ratio, the profit factor, win rate, Sharpe ratio, expectancy, risk of ruin, average holding time of winning and losing trades. We also gonna interpret the projected annualized returns and volatility, monthly returns and weekly returns of our trading system. And we will understand the maximum drawdown and understand the relative drawdown according to the balance, relative drawdown according to the equity and floating drawdown. Okay. Then we're going to essentially use the 1.5x to 2x ATR 14 technique to define the SL, and 3x to 4x ATR 14 techniques to define the TP. This is one of the way to define and manage risk. We will understand the situation where the usage of trailing stops and break-even stops are applicable. We will understand the situation where the partial profit taking is applicable. We will also understand the situation where Fibonacci 50 to 61.8% retracement tool is used to place the optimal stop loss. Okay, we will be using the position size calculator to calculate appropriate position size in lots for any particular trade. Okay, for that purpose, we're gonna use the position size calculator, and we also gonna use the earn Forex position size calculator indicator for MT4, MT5. And we will create a robust risk management and position size calculator using Microsoft Excel. Okay, then the next step would be the trade journaling. Okay, we will understand the importance of journaling our trades, characteristics of the effective journal, and the components of a complete trading journal. Okay, we will essentially learn how to use a Microsoft Excel to journal our trades, and we will also use in applications like Trello, Notion, and Evernote task management tools to journal our trades. Okay, we will also learn how to deploy or employ my FX book, FX Blue, and Psychoation to track the trading performance. And at last, we will learn how to use the Edgewong application and software to journal trades. The next step after trade journaling is the forward testing, back testing, and the practice sessions. Okay, we will use the past data to charts to visualize and forward test trading strategies and trading setups, which we have learned so far. We're going to practice them on live mentorship sessions. And then we will use the demo or the prop firm free trials to forward test trading strategies and trading setups. If you don't know what does the prop firm means at this point, you don't have to be curious. You don't have to be confused. I'm going to cover that at the later stages of my mentorship session. Okay, we will learn how to use a TradingView replay function to backtest past data charts, trading setups, and the trading strategies. Then we will employ the usage of Forex simulation software to backtest past data charts, trading setups, and trading strategies. And essentially, we can also use the Forex tester to backtest past data charts, trading setups, and trading strategies. Okay. Once we are done with the forward testing, back testing, and practice sessions, we gonna learn and discover more about the remote proprietary trading firms. Okay, we will understand the concepts of remote proprietary trading firms. We will understand how the remote proprietary trading firms work. We will understand how the remote proprietary trading firms are the game changers for the retail traders industry. Okay, so understanding the rules of the remote proprietary trading firms would be the next step. We would understand how remote proprietary trading firms evaluate and pick the best retail traders for their firms. We will understand the best practices and tips to pass the remote proprietary trading firms evaluation and essentially getting funded. The goal is to get funded. So, and then we're gonna look over some scenarios and develop a career in professional financial trading. We're gonna discover the concepts and learn the concepts of longevity, patience, discipline, and professionalism. Okay, then the last step of the mentorship would be the trading psychology and building a trading and a professional trading mindset. This is because I believe that trading psychology is the only hurdle which a professional trader may face in the future and from time to time. So obviously, we cannot be in the best mindset all the time, but we can learn how to manage our mindset, and we can learn how to manage our emotions, and this will definitely uh, affect our trading results, right? Okay, so in this trading psychology sections, we're going to discuss that the best trading psychology tips for beginners, how to make most of our demo trading, and we're gonna discover that are we ready to trade real money. And we're gonna also discuss the psychological difference of demo trading and live trading. Okay, we're gonna discuss the tips for the part-time forex traders, and we're gonna discuss if we are ready to become a full-time trader. Okay, we will learn how to learn from our losses, how to learn from our winning trades, how to deal with trading stress, how to keep focused during the volatile and uncertain times, how to recover after experiencing losing streaks and drawdowns. And we will develop some good trading habits. Okay. Then we're going to discuss some of the trading psychology biases, which are which frequently occur and are experienced by many traders. These include negativity bias, the gambler's fallacy bias, the status quo bias, the dilution effect bias, the hindsight bias, the confirmation bias, information bias, overconfidence bias, fear of missing out bias, recency and availability bias, and the last and the most important, egocentric bias. And we're going to also learn how to solve and how to resolve and solve these trading psychology biases. Okay. We will learn how to adopt the winning attitude, mindfulness, meditation, and affirmation in trading in order to become a better trader. We will essentially rewire our brain for success in trading. Okay, so this was a general overview of my mentorship session. What I gonna be discussing in my what I will be teaching, what I will be teaching in my mentorship sessions, my upcoming subsequent mentorship sessions. Okay, so the mentorship sessions, the first session starts from uh, Wednesday. Okay, so the mentorship session will basically be in the form of the pre-recorded video, and it will be posted on the YouTube. Okay, I will create a separate channel for it, and I will create a separate playlist for my videos for this mentorship session, so that you guys can easily navigate and scroll through my mentorship sessions. Okay, there are no hard and fixed timelines. The mentorship session is very, very flexible. Okay, so the first session will start on 5th and 6th. Okay, the first session will start on 5th. The second session will be on 6th of April 2023, and then the third session would be on Saturday 8th of April, and the fourth session would be on 9th of April. Okay, Sunday. And then after that, every Saturday and Sunday, there will be subsequent mentorship sessions. Okay. So these mentorship sessions will run across April, May, and June. And then on 1st of July, these mentorship sessions will essentially end. Okay, they will come to an end. Okay, and that's it, right? So I hope you guys have found this video insightful, deeper, and easier to understand. Of course, there might be some terminologies which you might not be getting at this point of time, but as we progress through our mentorship sessions, many things would become clearer to you with time. Okay, so it's just a matter of time. So if you have the right attitude of learning, then obviously becoming a professional trader should not be a problem. I guarantee you the results if you follow the step-by-step method and the procedure which I outline and highlight. during this, which I essentially teach as well during these mentorship sessions, then you will become a professional trader. Okay. So yeah. So guys, let's wind up this video. So I'm gonna see you during my next subsequent mentorship sessions. Okay. All the very best to you. Have a nice day. Bye-bye.